Yes, you read that correctly. $0 down mortgages are back, with some changes. With the mortgage rates nearly doubling and home prices dropping like it's 2009, banks are testing zero-down mortgages, which were widely used during the real estate boom of 2003 to 2006, along with other questionable practices. But this time, it's different, or so it seems. It probably won't end up like 2008 crisis since the scale is smaller and the due diligence process is stricter. However, there is still plenty of risk to this approach. In this video, I will talk about all the facts around this program, and towards the end of the video, I will share with you my personal thoughts on these types of loans. For those of you who are new to the channel, welcome. My name is Neera and I'm a financial analyst. I talk about personal finance and investments and teach you how to make money and grow it exponentially. If you're interested in this topic, consider subscribing, as this will help the channel grow and impact more people. Homeownership has long been considered a cornerstone of the American dream. However, coming up with a down payment has always been the biggest obstacle, and complex paperwork and stringent mortgage requirements make it an intimidating and a stressful process for a lot of people. Additionally, many prospective buyers may not have the necessary credit history to qualify for a mortgage loan, which can make it difficult to purchase a home on their own. Therefore, Bank of America announced a pilot of a new loan program with zero down payment and zero closing costs for first-time homebuyers, aimed at narrowing the racial wealth gap. Surprisingly, unlike traditional loans, which base their approval decisions on factors such as credit score and employment history, the Community Affordable Loan Solution Program looks at things like whether you pay your rent, utilities, and insurance, among other things, on time. That means that even if you've been through tough times, you may still be eligible for this loan. This type of mortgage is also beneficial because it doesn't have any mortgage insurance, which is typically paid for loans less than 20% down payment. All you have to do is complete a homebuyer certification course that guides first-time homebuyers on buying process and ownership responsibilities prior to applying for the mortgage. The bank is using what's called a Special Purpose Credit Program, or SPCP, a policy made possible by the 1974 Equal Credit Opportunity Act. The logic behind the program is that by making it easier for people with low incomes or bad credits to get loans, the policy will ultimately help expand access to credit and promote economic growth. Critics point out that the policy simply makes it easier for banks to extend loans to people who may not be able to repay them, leading to higher default rates and more foreclosures. Supporters counter that the SPCP helped millions of Americans achieve their dream of home ownership. Currently, it is only available in a few cities including Charlotte, Dallas, Detroit, Los Angeles, and Miami. Under the Bank of America program, the lender is giving homebuyers down payment grants of $10,000 to $15,000, so they have immediate equity in their homes. The move is designed to protect the bank's investment and keep foreclosures at bay. And because they're grants, it sounds like they do not need to be repaid. A slumping housing market can turn homeownership dream into a nightmare for many homeowners, especially those who don't have much equity in their homes. If the housing market were to slump further, borrowers with little equity may find themselves underwater on their mortgages, meaning owing more than their homes are worth. This in turn can create a strong incentive to stop making mortgage payments, which can further depress prices. Therefore, the immediate equity can ensure that borrowers keep paying their mortgages even if prices drop, helping to stabilize the housing market. And if the housing market does rebound, those homeowners will be in a good position to reap the benefits. Here are some problems I see with this program. Number one, this is not a good time to purchase real estate. With decreasing home prices, buyers might find themselves underwater very soon. And if they will need to sell the house, borrowers are at higher risk of paying out of pocket to cover the difference between the loan amount and the home price. Number two, anyone of any race or ethnicity is eligible to apply. Eligibility is determined by income and place of residence. This leads to a concern about gentrification. Gentrification is often associated with displacements of lower income residents, as well as an increase in property rents and values. The concern is that the new loan program will lead to an influx of wealthier residents who will use this program to purchase the targeted location and will drive up the prices and push out existing residents. Number three, they'll probably package the grant money into the fees and interest rates. One way or the other, they'll get their goal.
One way or another, They always get that gold.
There is no such thing as free money with banks. Therefore, it is better marketing than a deal. Nevertheless, if you want to take advantage of this program, here are a few things you should consider. Number one, what rates are they offering and how does that compare to other mortgage products? Since the lender is taking on more risk, they'd want to be compensated for it through a high interest rate. So your job is to calculate if this deal makes more sense to you compared to saving up for a down payment. Number two, what are the terms of the loan? Sometimes the devil is in the details, so you have to be extra careful when going through the loan contract. If there's not a big difference in rates, it might be in the terms that are in the contract that'll make the deal unattractive to you. If you have any experience with this kind of mortgage, please reach out or comment down below. If you like this video, leave us a thumbs up, subscribe to the channel, and make sure you turn notifications to never miss out. Check out my other videos on the channel for other money-making ideas you don't want to miss out on. As always, thanks for watching, and I'll see you next time. The cornerstone of the cornerstone. Determined.